In today's episode of Crypto Over Coffee, we're talking about the Bitcoin halving. More specifically, how you need to prepare for the Bitcoin halving and what to expect when that happens. This video is going to contain the fundamentals of what the Bitcoin halving is, why it matters, and what it means for the market in these unique scenarios that we are in today. And so please do hit the subscribe button, follow me on the podcast platform of your choosing, and let's go ahead and dive into it. So for those of you who are Bitcoin OGs, or you've been in the space for a long time, you've maybe been through previous halving cycles, you probably have a fundamental idea of what the Bitcoin halving is. So if that's the case, you can skip this section of the video where I describe the fundamentals of what the halving is. But it may be worth you sticking around because maybe I explained it in a way that you've never heard before, and you can share it with your friends and family so they can also understand what it is. So to understand what the halving is, you need to understand the fundamentals of the Bitcoin protocol. So the Bitcoin protocol, its lifeblood, the way it functions is through proof of work consensus. And this consensus mechanism is what does a lot of things. It allows the network to continue to move forward by structuring blocks of transactions appended one after the other, hence the name blockchain. And it does that through a sort of group of computers or individuals, companies, called miners, right? And these miners, as nodes in the network that all run the Bitcoin software, are competing to solve a cryptographic puzzle. And this cryptographic puzzle is how they prove or show proof of work. So there's an input cost to that. The computers that these people run take electricity as input to calculate guesses at this cryptographic puzzle. It's basically trying to find a target value that meets certain conditions. And they all race, computing billions and billions and trillions of these values to guess at this target value. And they find one, they find a value that complies with that target value, and they publish that to the rest of the network as proof of work. As a reward for all this cost and all this effort, that miner is given the responsibility, the privilege of adding a new block filled with transactions, maybe a transaction from you or I of BTC to the Bitcoin blockchain. That is how the blockchain functions, and it's a core principle of the function of the chain. It is a community-run utility. Miners contribute to the network and they process our transactions in a decentralized fashion. So as a reward for all that work, because miners don't always win that right and responsibility to create a block, they are spending lots of resources to compute these values to try and get that proof of work puzzle solved. And so as a reward for those who do successfully reach proof of work, share that with the network, create a block in the chain, they get a reward in the form of BTC. Today, that reward is 6.25 BTC. And so at present value, that's quite a lot of money. What happens is that reward goes to that miner as a reward for the work that they've done and for driving the network forward. The halving is the cyclical halving of that block reward. And if you think about what that block reward really is, or as it's called, the block subsidy, it's what allows people, it encourages miners to keep mining. What that does is it's basically the release of Bitcoin units or BTC units into circulation up to the fixed supply. So that's the other thing people always hear about in Bitcoin. There's a 21 million Bitcoin fixed supply. That's why it's a scarce, provably scarce asset. And that is valuable. That is true. So this subsidy, this block subsidy, is the main way by which new BTC units are released into circulation. This is effectively the inflation rate of Bitcoin. People get this confused, okay? Inflation rate is not like inflation of fiat. It's not inflation of the total supply that will be available. It's inflation of the issuance, right? The issuance rate, I think, is the better way of putting it, up to the cap. Okay, so around 4 years in human time, or if we're talking about Bitcoin time, 210,000 blocks mined in the network, this rate of inflation is cut in half. So that means in a little over a month estimated, right? A little over a month estimated from the time of filming this video, there will be another halving event in the Bitcoin blockchain. And that means for every new block that is mined, 3.125 Bitcoin is going to be issued to the miner who has the privilege of mining that block and appending it to the chain, so on and so forth. It will go for another 210,000 blocks, and then we will go and we'll have another halving, and that reward will again be cut in half to like 1 and some change, right? So you can see this is the mechanism and how it works. Now, we understand the fundamentals. We can go much deeper into the principles of Bitcoin, the economic security of Bitcoin, but I actually have another video coming, which is worth subscribing for, by the way, talking about what happens when the last Bitcoin of that 21 million supply is actually issued, what happens then, but we'll talk about that in another day. Let's talk about the economic effects of the halving and what generally happens. So people often talk about the halving as this catalyst for insane price growth for Bitcoin. Why? Because the laws of supply and demand apply here. Because there's fewer Bitcoin released into circulation on this cadence, each block. And therefore, as long as demand is static or rising, meaning it's not going down, you would imagine that the pressure of price is going to go up. What usually happens in the halving is just that. Usually you have a halving, then you might have kind of you'll have a pre-halving sell-off on Bitcoin, then you have the halving, and then you start to see the effects of supply and demand taking over. And with that demand being static or increasing, the limited supply, the scarcity of Bitcoin on the market drives that price higher. And we've seen that in previous 4-year cycles in crypto. No wonder why that's a 4-year cycle, that the price of Bitcoin has reached all-time highs in the wake of the halving. Now this year, it's a little different, right? Because we've reached all-time high before the halving, and that's because this is a much different environment. If you watched my last video, thank you if you have, you'll know that my philosophy is that a lot of the previous year's data around the Bitcoin halving, it doesn't really apply now because we're in a completely different world. Bitcoin has reached its all-time high. It's broken its all-time high prior to the halving. And so a lot of people say, hey, we broke an all-time high before the halving because of the Bitcoin ETF. Look at those inflows. That means that we're going sky high after the halving. And you know what? By the principles of supply and demand, I would say it's very likely that that is the case on paper. There are a lot of different things that could be at play here. We're going to talk about that in a second, what I think this is going to do to the price of Bitcoin. What are the different scenarios, the bull and bear case? You always got to look at both sides, okay? This is a balanced channel. That's the focus, crypto for critical thinkers. Let's first sort of close the loop, though, on the effects of the halving in Bitcoin in general, okay? So what happens usually in this case is that there is an immediate impact to miner profitability. And you can imagine why. Miners are spending the same amount generally on electricity and compute to calculate this proof of work value and try and compete to mine a block. Suddenly, when they win a block and they have the privilege of minting a block, or mining a block, excuse me, their reward is now cut in half. And so what happens is there are miners who inevitably shut down after the halving because the profitability equation just doesn't make sense for them anymore because of their general probability, their share of compute power in the network, their likelihood of mining a block is so low. And even if they do, the price to cover doesn't cover their costs on a certain scale, okay? So there's mathematics that go into this profitability around miners. And the difficulty that it takes, or the challenge of that particular proof of work puzzle adjusts based on the total amount of compute power allocated to mining in the network. So it's a moving scale. So the competitive landscape changes for each individual miner or mining coalition depending on these economic variables: cost of electricity, likelihood of mining a block, and the reward that they could get if they mine a block. A lot of miners are thinking, if I have this percentage chance of mining a block and I can cover costs, if I win N number of blocks over this period of time, I'm still in the profit. That's the general equation. Highly simplified, but that's the general equation. So you would imagine why miners would quit. Profitability changes because their rewards are cut in half until the price adjusts. So right now, I think miners are very profitable because Bitcoin has gone up exceptionally high compared to traditional halving cycles, okay? So it's interesting. We may not see the type of drop-off we've seen in mining, basically people shutting down mining changes in hash rate or the overall compute power in the network like we have in years past. Speculative, but maybe. We may also not see the type of insane price growth after the halving because we're sort of already on our way to pricing equilibrium as it relates to costs for miners. So miners may be a little closer to profitability even post-halving than they were in previous halvings because we've already hit an all-time high. So again, that doesn't necessarily say Bitcoin's price goes down, but maybe we don't see the same percentage gains in the same time scale that we did in previous halvings. But there's another thing we need to think about because it's not just about miners, it's about the market as well. It's about the demand side. So when miners get their reward, some of them may sell to cover costs. They may sell to capture profits. They may hold some. Different approaches, right? Right now we have a Bitcoin ETF. We don't yet have retail fervor yet for Bitcoin. I think we'll probably see that. But we have massive institutions and retirement funds and all these people diving in. The inflows to Bitcoin ETFs are beyond any of our expectations, to be honest. So with that, you have a lot of demand. You have a lot of demand for now an increasingly scarce supply of Bitcoin. So this is getting into the bull case, okay? I told you I'd talk about the bull case and the bear case. This is the bull case. You have 3.125 Bitcoin being released into circulation up to that cap every block, every 10 or so minutes on average. The demand right now for Bitcoin based on inflows just to the ETFs far outstrips the available supply that will be there with regard to Bitcoin available in circulation to buy. And so that means the price has to adjust to meet that equilibrium point in the supply and demand curve, right? So there's excess demand for a very finite and scarce supply of an asset. That's the bull case, is that you have institutions gobbling up BTC at a much faster rate than it can be supplied. And the halving is only going to accelerate that particular, that asymmetry on that curve, okay? Now, on the flip side, we have to think about data around wallets in profit. Okay, so wallets in profit, you look at short-term and long-term holders in profit. I'm going to focus on specifically the short-term holders to start, but it's really both categories, right? Actually, the long-term holders are a separate story, but we'll lump them together for now. If you look at holders in profit, it's the number of addresses with Bitcoin positions that are in profit at today's market value. If you look at that data on any platform that you like that offers the data. I think Sentiment offers that data, and I've used their platform quite a bit. If you look at that data, you will see that there's a lot, actually the majority of Bitcoin addresses in the long-term hold category and the short-term hold category are in profit, which means and says to me that even after the halving, there are a lot of people that are sort of position like, I want to see what the price is going to do after the halving, because traditionally it goes way up after the halving. So a lot of people haven't taken profits yet, even though we are past all-time highs previously, because they want more gains. Common greed, right? People do that. What happens when the price maybe starts to adjust up? You have inflows, you have people, a huge majority of people that are in profit. You're going to start to see selling. So that's going to then change again the supply and demand curve. It's going to show now there's a little bit more supply available. I think they're going to be buyers, especially on the institutional side, because that's the playbook. Institutions, the big boys, they want to buy Bitcoin from retail. They want your Bitcoin and they will buy it from you, especially when fear is running wild in the streets and prices start to drop. So that's the strategy. What I find really interesting about that is that traditionally, this data point is pretty good. When there are a large majority of wallets in profit, you tend to see selling at certain psychological levels. You know, Bitcoin has dropped down a little bit after it broke all-time highs. When we reach all-time highs again, people that are a little freaked out by the fact that we went below 70K again, they might sell, okay? That's probably going to happen. Let's say when we hit 75K, 80K, 90K, and I think we will, you're going to see people selling, especially these holders in profit, especially those that are in short-term positions, because there are a lot of holders of Bitcoin who will never sell. They've made it very clear that they won't. But everyone is going to sell at a certain point, okay? Not everyone, but most people, I'll caveat. So that's the that's the bear case, right? The bear case is that the setup of the market, and we welcomed big whales into the market here with institutions, okay? They're a lot more sophisticated than the average retail investor. They're going to behave a little differently, and they've got a big bat to swing in the market. They've got a large amount of supply of BTC on hand where they can do some damage if they wanted to. So maybe this demand that's been driven is to drive the market up to get speculation ahead of the halving so that they can sort of reset the market by driving some selling pressure and then unseating some of these Bitcoin units from people who have been long-term holders. They want to collect more of that supply. This is a very scarce asset. I wouldn't put it past. So that's the bear case. I'm leaning towards the bull case. The problem is that it's so unpredictable now what happens in shorter timescales, because the data from previous cycles, in my opinion, are largely invalidated by the fact that completely different macroeconomic environment for one, the presence of massive institutions that were not here in the last cycle at the scale that they were before. And then lastly, the fact that we are now, because of those confluence of factors, at an all-time high before the halving, and it changes the economic reaction, the dynamics that drive the reactions from miners and other market participants. So what I would say in this case is, if you look at the data and make your own conclusion, what does that say to you if you're a Bitcoin holder? What should you do as you act ahead of the Bitcoin halving? You have 30 some odd days to prepare yourself. Are you on the I will hold even if there's tumult early on in the market? If there's a big correction and it takes 6 months to a year to recover, it doesn't bother me. I'm all in long term on Bitcoin. Or are you saying, you know what, I'm going to take my profits and see what happens, even if I have to buy back in slightly higher? I'm more comfortable being able to make the decision with my profits captured, right? It all depends on your own personal plan and strategy with regard to your crypto portfolio, specifically in this case for your BTC. So let me touch right before people ask me in the comments, what does this mean for altcoins? Okay, because previous Bitcoin halving cycles have largely driven a largely congruent altcoin cycle as profits cycle off of Bitcoin past its all-time high into altcoin markets, and you see insane stuff going on in the altcoin space. We've already seen some of that, but I'm curious as I watch this space whether, because of the presence of institutions are driving a lot of the price action of Bitcoin and not retail in this particular instance, are we going to see the same type of behavior in altcoins that we have at all-time highs previously in previous cycles? Now, you see the evidence, meme coins, Solana, there's still sort of that money cycling around, but is it going to happen in the exact same way as previous halving cycles? I'm not 100% sure. So that's something that you're going to have to think about as you approach your own plan for the market. What's your hypothesis? Are you more comfortable just being Bitcoin only? I've seen more people, actually friends that I've had from previous, many, many years in crypto, have now changed their tune and said, you know what, I can't take it. I can't take the volatility, the craziness, the tracking everything and keeping track of being on X all the time. I just want it to be simple. I bought Bitcoin. I'm comfortable to hold. I think that that's the play. I may not get ultra rich from it, but I'm comfortable it's going to protect my spending power. More power to them, right? I think that makes a lot of sense for some people, and others would like to be in that market, growing in the altcoin market, potentially growing their resources. So that choice is completely up to you. I hope this video was helpful in giving you fundamental analysis of what the Bitcoin halving actually is, what it means in this particular context, and what's going to happen and when. And if you agree or disagree with any of my predictions or any of my thoughts, these are my opinions, of course, please let me know in the comments. Please be respectful towards others in the comments, and looking forward to hearing what you think. So thanks very much for watching or listening. Hope you and your family have a wonderful rest of your weekend. And until next time, cheers.